All right, in this lecture, we're going to be talking about auditing the payroll cycle. Before we get into the audit part of the payroll cycle, I thought it would be good to start out with a review of the payroll process in general. It'll help you understand better the process of auditing that cycle. So the key accounts that we have in payroll are usually payroll expense of some sort. It could be wages expense. There's usually some sort of employer payroll tax expense to represent the portion of Social Security that the employer has to pay related to the match on employees' Social Security. Additionally, there's unemployment funds for both federal and state that expenses the employer would incur that they would use that employer payroll tax expense. You're going to see accrued liability on the liability section of the balance sheet. That usually represents you get to the end of the year, it's not on a payroll date, so the last few days, last week and a half or so of that year may not have been paid. You've got to accrue that payroll. Same with withholding taxes payable. Those may represent the fact that you've withheld state or federal taxes from the employee's checks, could be Social Security, could be other things too that we'll get into in a minute, but the withholding part of those checks is withheld and then eventually paid to the federal agency or the state agency, but you want to make sure that that balance on that liability is correct. And part of that, again, is the FICA payable, the Social Security portion of that. It may be combined with each other with the withholding taxes. You never know what a client's going to do, how they're going to separate those things, so you have to be ready for that. If you get into a manufacturing area, you might see direct labor or indirect labor, things broken out into jobs or different manufacturing areas. You'll see salaries, you could see bonuses or commission expenses, and then a lot of this relates to employee benefits that are here. So we go back up to the withholdings. If you had a 401k amount withheld from your check as an employee, the employer will hold on to that and then pay that over to the agency that's managing those 401k funds. So those are, again, different accounts that you're going to look at and need to get familiar with when you get into payroll. There'll also be things like workers' comp expenses, disability expenses. All those are part of this. So let's go over the key documents, because one of the first steps of an employee coming in is HR. They come in, they sign their paperwork, they have these forms that they fill out. You may have done these before on a work job. You may have never noticed all the different forms that you've filed, but some examples as an auditor to go in and verify that that employee actually exists and they're making the wages they should be. You've had the federal IA-9 form in the past that would have the verification of that employee as a citizen of the United States. You might have a driver's license here, and we've got McLovin, our new employee from Hawaii. There's a Social Security card that an employee might bring in. They would then fill out their W-4 for the withholdings that they would want to have taken out of their paycheck. And with the recent tax changes in the last year, that form has changed significantly. It used to be based on allowances of how many dependents you had and things. Now it's more about amounts. So you'll see some older forms and some newer forms related to the W-4. And states usually have the same thing, so I've put the New York State IT 2104 on here. And as I said, if they don't have a driver's license, you might get a passport that will verify their existence as an actual being in this world and a U.S. citizen. And then finally, there'll be some sort of agreement or contract or wage rate that you'll see in this personnel file. And that wage rate will likely show an hourly rate they're supposed to be paid, any salary. You'll also see updates as they go through the years there. You might see changes and increases in pay structure. So all that should be verifiable in this human resource record portion of the company, and then that an auditor will then leverage for their audit. So key documents when you go out and review the actual processing of payroll is there's going to be time records out there. If you work for a manufacturing industry, you might put what jobs you're working on, maybe not so much customer, but you clock in your time when you start, when you stop, the type of work that you might be doing on that. As you work for a CPA firm, you might put in that client information and the number of hours or minutes that you spent on that particular tax return. You may also wind up filing a weekly timesheet. If you're in management, you may not have to break down your billable hours, and you might just submit a weekly timesheet. So, all sorts of forms of submission. It could be electronic also. So, Paychecks, for example, has a clocking system that would record all that then electronically the supervisor would go in and approve those hours. It may look similar to what you're seeing from these manual forms, but it would be online. So when it comes to processing those documents after they've been approved for the hours, we could go into a system and do that. I'm going to show a little bit of Paychecks here. So this is the Paychecks Flex system, in which you have this whole dashboard of when you have to do payroll next, the reporting that's on there, the people information so that you can get into that and change things there, the link to the general ledger of the accounting system you have. So you can see on the left side of that, there's all sorts of areas within this Paychecks Flex that you can use to keep track of your HR area and have documents that back up that payroll. But as an accountant, you would go in here and potentially change things or enter payroll as a person who's working in that accounting role. So let's go through some of that. So if we were to go in and enter payroll, so this is a typical payroll sheet, and again, it can be formulated so that I just enter George Jones' time here, or the hours for Hannah Shantana here. So these are ways I can look at payroll and enter that. So the hour entry there for Hannah Shantana, and the George Jones is a salary, so that's why that amount popped up. You'll be able to see this like a spreadsheet. Enter that time. You can see across the columns there's hourly hours, there's vacation hours, overtime with rates, comp time, holiday hours. It keeps track of all those. So it will either manually be entered by an accountant based on timesheets that they receive, or it could be electronically fed through a time reporting system. Then when that process is processed, that payroll will have certain reports that you can look at. Like here's a payroll journal, and you can see we've got Brad Pitt's time for hours and his wages and his earnings. We'll see the deductions that he's got and the withholdings for Social Security and Medicare. But let's say there's a problem with that payroll after we've processed it, or while we're reviewing it before we've actually finalized it. We can go into payroll master records. So this is a view of Payflex's payroll master. So we've got Brad Pitt, and he's linked to our military zombie squad organization. We can go see his profile, which will list his address, which department he works for, will be when he started working here in the employment section, what kind of pay he gets, and that might include the deductions or the withholdings for 401k plans, things like that. You've got the taxes, and that'll be his withholdings for his W-4 or his New York State IT 2104. And then you can see past check stubs that Brad has received, and we also keep track of vacation time, comp time, in a time off and accrual section. So you can see that Paychecks really tries to keep track of all this, and from an auditor standpoint, we should be able to get reports on any of these areas to review and tie out to the HR records, the time records that we looked at previously. So all this is usually available for us. And that's Paychecks, but let's look at QuickBooks, because QuickBooks also provides this service. So you'll see in the QuickBooks system, you have an employee center, just like we did with customer centers and vendor centers. So we can add employees, similar type of information. We've got the employment info, we've got payroll info related to wages and withholdings. So all this is kept within that QuickBooks system so that you can process that through QuickBooks. And QuickBooks offers that again as a service that can be used. Many people will just enter that information into QuickBooks after they've used a system like Paychex or some other ADP or whatever system they've got. So as an auditor, you've got to be aware of that because there could be some manual issues related to the entries from a payroll system into the QuickBooks system that may be tracking the financials. So it's nice that QuickBooks has a whole bunch of employee reports that you can look at. So if we go into QuickBooks, go down to reports, you'll see there's an employee and payroll section. Within there, you can get payroll summaries, you can get information by employees, you can see certain master file information like contact lists, withholding records for employees. All of this is available also within the QuickBooks system, depending on if they use the payroll feature. If they just enter transactions or journal entries for payroll, you're not going to be able to use any of these reports. So it's important to know ahead of time as an auditor what's available to you. And again, many of the systems out there have this. And again, many of the systems might have subsidiary systems that they then just import or enter data. Because that's the other thing is Paychex will have a feed that can go into QuickBooks. But let's assess some of the controls of the payroll cycle. You'll look at that adequate separation of duties. That's a real big key because you don't want somebody who can enter hours, create an employee, be able to push things through so that a ghost employee, and we'll talk about that in a minute, exists in the system and they wind up just cutting money to themselves. You want proper authorizations. Has that payroll been set up properly? Has HR reviewed that? Has management reviewed that? Are the benefits correctly put in there? Does someone have medical benefits that they should have? Maybe you need to work for 6 months before you get medical benefits or an opportunity to be in the 401k system. You've got to make sure that that's reviewed and in the system properly. Have the timesheets or the time clocks been properly approved and input as they go into that system? So we need that adequate documentation and records. That's another key control to back up that payroll cycle and that payroll data that's being entered. The independent checks of all those calculations. So we've approved everything going into the system. Now what's coming out, management might want to check those payroll journals to make sure what we're expecting payroll to be for that week or that biweekly payroll is right. We want to double check and have someone review that all the general accounts have been impacted properly for that payroll as it gets processed. And then if ultimately we're going to write checks to employees, a lot of things are direct deposit, and we'll talk about that further in substantive tests, but you want to make sure those checks are guarded, there's physical controls on those, they're pre-numbered checks. We don't see a gap in pre-numbered checks because where did those payroll checks disappear to? So that's an important control that we'll have on the payroll cycle. When we're planning to do our audit, some of the analytical procedures we might want to incorporate are comparing gross amounts from prior years to the current year's preliminaries that you've received from your client. Do they seem in line? If there's some significant changes, we will want to review those. A couple tests I like to do. One of them is I divide the payroll cost by sales for the current and prior years and compare those. Because the theory is if they've had an increase in sales or a decrease in sales potentially, but let's say an increase in sales, then there should be an increase in payroll. So the percentages should be similar unless there's some unknown change that's happened that we'll want to investigate when we're out on the audit. We'll look at the accruals out there because based on the client pay periods and average pay required, we can estimate what the accrued payroll should be and compare that to what preliminary and unaudited financial statements we've been given by our clients. We'll also look at the accrued commissions and bonuses. We'll look at accrued PTO or that personal time off. Do they have accrued vacation and sick time recorded? Has it changed significantly? We'll look at accrued payroll taxes because that should kind of align up with the accrued payroll. And then we'll also review contract labor amounts. Contract labor amounts are usually when you have an employee that technically isn't an employee. You just hire somebody for small jobs, and you'll pay them over the table with checks, but they might become 1099 contractors. You want to look at significant changes in that because maybe the client is trying to avoid payroll taxes and increasing their contract labor, so that you don't want them to in, come under violation of the labor department or labor laws. So you'll want to intensify your review of that if you see significant changes in contract labor. Now, common tests of those controls we would review human resource policies. Do they have the policies in place? Do they have those employee files in place? Is there some sort of verification and review process to make sure all the paperwork's been done? Uh, have the hirings been approved by management? Are there also wage changes in these forms or these folders of employee information? What about terminations? Is there a process for that? And bonuses and commissions, is there something adequate to back those up? The employee benefits, is there a policy, a program that's clearly written that we can apply to these employees when we do our testing? We're going to observe and review master file maintenance. How do they update the employee files? Before we go in and do some actual testing of that, we want to know that they have a process in place. How about how they collect and approve that time that they receive? Is there a process for entering and reconciling that payroll, including approvals of the movement of money for payroll? Because many companies will have a separate payroll cash account that they'll just move money to that payroll cash account so that they know they've got payroll covered, and then it'll sweep out of there. If a paycheck system, for example, takes the taxes or clears that out for the direct deposits, it should be a very low balance on that payroll account, and all the movements of money in and out should correspond with the payroll records. So, is there proper accounting of that payroll? Is it hitting all the proper expense accounts? Is it hitting all the proper withholding accounts? And then again, we might observe check distribution to make sure that if there is a check process, that the employees are receiving them in a proper manner, and that those employees actually exist. So substantive tests, when we dive into it, we're going to review those payroll journals and those general ledgers, and we're going to look for large and unusual amounts that pop out. Why was there a large amount? Well, that could have been the payroll that they pay their commissions once a year or their bonuses once a year. It's important for us to identify that. So next, we're going to select a sample of employees. We're going to ensure that those sampled employees have all the onboarding paperwork that they're supposed to have, so that we'll know that they do exist and that the rates that are in there are proper. We're going to review their direct deposit accounts or canceled check information to make sure that it's got proper endorsements, that those direct deposit accounts are properly filled out. We're going to ensure that the expected pay aligns with their actual pay. This is what they were supposed to make. This is the timesheet that says how many hours they had. That should correspond to that employee's pay. We're going to trace any commissions or bonuses back to contracts, agreements, or plans that the company may have. We'll also select payroll periods. We'll look at those periods and ensure that those amounts reconcile to the bank fund movements. They prove out to the bank reconciliations. We're going to test the calculations of that payroll journal to the payroll spreadsheets or any analysis that we've done for that week. We want to make sure that all the proper accounts have been hit from that payroll and affected, so we can look at our general ledger and see that week's payroll. Did it go over to the general ledger as we expect? And then has management looked at that payroll, signed off on that total payroll so that we know that it's been approved? Then we'll move on to the bank reconciliation process, see the ins and outs, recalculate it for accuracy, really look at old outstanding items, because when you think about it, when it comes to payroll, there really shouldn't be too many outstanding items. But every now and then you might find a check that was sent to a former employee or sent to an employee that just never cashed. Just review that process with the management and make sure that we know what we're going to do with those outstanding checks. We might have to escheat those, which would mean turn them over to the state if they've been out there for more than 3 years. And ensure a management has reviewed and approved these reconciliations in a timely manner. So they're very aware and someone's looked at that, or at least someone else has looked at that so that we've got proper segregation of duties. So some additional tests that we'll usually perform is we'll reconcile the payroll to some of the quarterly reporting to the federal government. So for example, on the 941, which is filed quarterly, that should correspond to our gross pay. Should have our federal withholdings and our social security taxes and withholdings on there. This should correlate with our general ledger, correspond with it, and the ins and outs should tie right out to this 941. When they don't, there could be some timing differences in there, but you really want to tie that out. And another thing you can do is look at the total annual costs. Look at your W-2 statements. All the W-2s that have been issued by that company, there's actually a form that oversees that shows the total of all the W-2s. That should really correlate with your payroll expenses that you've got. So make sure you double check those. So finally, when it comes to fraud risks and concerns related to payroll and how we try to mitigate those, here's a few of them. One is the ghost employees, fake employees that don't really exist that have been put on the employee records. We're going to test HR records, and employee verification process helps to identify this or reduce that exposure so that we don't have a fake employee on there. And usually a good segregation of duties of oversight on that ensures that too. One of the flash tests that I like to do related to that is divide net pay by gross pay. And if you think about it, somebody who's going to steal money through a ghost employee wants a high net pay because they don't want anything withheld. So I examine anything with a greater than 85% from that calculation. Any employee with that, I'm going to examine and make sure they actually exist. We're going to look at the whole terminated employee process because one of the things that they'll do is leave an employee on the roster, but the funds could get redirected. So any changes to employees' direct deposits or addresses is something that we want to be able to identify and note because maybe the controller is stealing money. They change the direct deposit of that terminated employee so that the funds go to their bank account. That HR process needs to be reviewed and tested in this to make sure they have a good termination process. Next, one of the big exposures is fraudulent hours. So we want to make sure that someone's not putting false hours in there or excessive hours in there. So we want to make sure a good approval process exists and there's a verification of those approved work hours and the payroll hours entered. And you think, well, what does that mean? If there's an automated system, that's an easy process because it should be coming from the time reporting system that's probably been approved by a manager and feeds directly into the payroll system. You want to look for any adjustments first off. Why is there an adjustment? But if there's two systems where payroll is collected in one area and then entered in another area, you want to make sure that there's definite approvals and oversights and reviews and reconciliations of that time that's been entered into the payroll processing system because that's where the money's leaving or going out to the employees. Make sure that what they've been approved in the time reporting and work reporting system matches what's in the payroll and payroll payment system. And finally, fraudulent expense reports. That's where employees will submit fake or falsified expenses that they didn't incur, and they'll run it through the payroll system. So you'll see in some companies that will go directly through payroll and it will avoid the cash disbursement system. So you want to make sure you don't lose sight of those employee reimbursements through the payroll system and do some testing on that. Many companies will do a reimbursement through a check cashing system, so they'll do it through the normal disbursement system, and so you can get that information through disbursements. But if they run it through payroll, you've got to keep an extra eye on that to make sure that you understand and test some of those expenses to make sure there are any fraudulent expenses that are out there. So that concludes our discussion on the payroll cycle. If you have any questions on that, shoot me an email, give me a call, and I hope you enjoyed this lecture.